Okay. Good day, accounting scholars. We're going to continue talking about corporations, which we started last week, and we're going to continue. So here's your motivation for today. Every day is a new beginning. Problems and mistakes of yesterday are now just memories of lessons learned. Absorb the energy and possibilities of each new day. Acknowledge the simple beauty that can be taken for granted and look forward to tomorrow's new beginning. You are not stuck where you are unless you decide to be. So part 2, we're going to talk about Treasury stock. And we're focused on the cost method of recording Treasury stock. So what is Treasury stock? Last week I told you Treasury stock is the stock that the corporation purchases back from the shareholders. Why do they purchase it back? Well, the textbook gives you several reasons. Some of the primary reasons include to avoid a takeover in their corporation, to give them to employees as incentives, and possibly even to increase their shares of stock, their earnings per share in the marketplace. Could possibly even give these out as part of stock dividends. But nonetheless, these are stocks that they repurchase. So therefore, the ledger now has 3 types of stock in it. It has common stock, it has preferred stock, and now it has treasury stock. And all 3 have paid in capital. So when we repurchase the JE, journal entry, we're going to debit treasury stock and we're going to credit cash. And it's going to be whatever the purchase price is times the number of shares. That's what you see here. PP is purchase price. Purchase price now replaces par. So where before with common stock and preferred stock, you determine if you had a premium or a discount based on par. Now you use the purchase price, the PP, purchase price, to determine if you have a premium or a discount. So here in the premium, if we resell our treasury stock, because we can also resell it, we would debit cash for the selling price, SP, times the number of shares. We will have a credit to treasury stock for the value of the stock, remember what we paid for it, PP. And then we will have paid in capital from sale of treasury stock. So we will subtract the difference or multiply the difference by the number of shares. Same thing would go for the discount. We would have a debit to cash for the selling price times the number of shares. This time we will have a debit to paid in capital because it is a discount, which is also rare to sell stock at a discount, but sometimes it happens. This will be the difference between the value of the treasury stock and the cash. So again, treasury stock is measured at the purchase price, what we repurchased the stock at. Paid in capital, in sale of treasury stock cannot have a deficit or a debit balance because remember, stock has a normal credit balance. Exercise 12-12 and PR 12-38 is a review. Now 12-38 includes all the stock transactions because remember all these transactions can be done at one time, mixed in with other transactions that you've already learned. Stockholders' equity section. We still have of the balance sheet, that is. So we still have our heading of the balance sheet, and when we get to, we're still going to have our assets on the left and our liabilities above our stockholders' equity, and then we'll have stockholders' equity. Because we have paid in capital now, we have to include it on our stockholders' equity. Because we have preferred stock and common stock, we have to include both. So we're going to have a subtotal. Preferred stock plus the paid in capital for preferred stock. Adding those two, getting a subtotal. Then we'll have common stock and the paid in capital in excess for that and get a subtotal. Then for sales of treasury stock, we would add that amount. So all 3 of these amounts then will be our total paid in capital, PIC. Then we add retained earnings, which is here. And then that gives us our total at this point. Now to get your total stockholders equity, you will have to subtract what your balance is in treasury stock. In other words, the stock that you repurchased that you still have. that you did not resell. So that means that because the textbook is not going to ask you to post when you journalize, you need to post to make sure that you keep track of your treasury stock so that you know how much you sold so that you can record your sales here, and how much you bought back so that you can record that down at the bottom of the stockholders' equity section. And then you will get your total stockholders' equity. There's a couple examples. I believe Exhibit 9 in your book is where this is. And practice 12-16 is your practice for the stockholders' equity. Then we have our statement of retained earnings. There's a practice, exercise 20. This is the next exhibit in your book, Exhibit 10, I believe. You still have your same heading. We're still going to have beginning balance and retained earnings. We're going to add net income or subtract the loss. And we're still going to subtract dividends, except now we have dividends for preferred stockholders and we have dividends for common stockholders, which we will subtotal here and then add or subtract net income or loss, and then get our change in retained earnings to get our ending. So again, exercise 20 is your practice for stockholders' equity. Stock splits. Then this means that the number of shares will increase by a multiple of whatever the split is, and the par value was split. So for example, if we have 50,000 shares of stock and we had a stock split of 2-to-1, then we'll literally multiply 50,000 times 2. If the stock split were 5-to-1, we will multiply 5 times 50,000, meaning that for every share that you own, you will get 2 more according to this one, or the other scenario, 5-to-1, you will get 5 more shares. Now, because your ownership does not change, you will divide the par. So if par is $10 and you divide it, that makes par $5. And when you multiply it back out, the value is still the same. Total paid in capital, total retained earnings, which is listed down here in this note, total shareholders' equity. None of these areas are affected by stock splits. Stock splits are good for the investor because that means that their dividends per share will be higher because they own more shares of stock. Exercise 12-11 is a practice for that. Earnings per share. There's an example on page 581. Net income minus preferred dividends divided by the average number of common shares outstanding. So that means you need to know how to calculate the number of shares outstanding, which I told you in part 1 is issued minus treasury stock. In the event that you have to calculate that, here's a typo here. This should be 10,528, not 1p. So in this example, you have some numbers for Bank of America and Wells Fargo. So what I want you to do is calculate the earnings per share, EPS, for Bank of America and for Wells Fargo. And then I want you to figure out which company, as in letter B, seems to be more profitable. And then which would you expect to have a larger quoted market price? You need to understand why you're doing it, how to calculate it, and what you're doing and the impact on it. So if you read page 581, as you calculate this, you will learn that Wells Fargo has a higher EPS, and you will learn that they probably will more than likely have a higher quoted market price just because they are earning more per share based on the fact that their net income is very high. In the event that you do not have preferred dividends in the example that you would calculate, plug in a 0 just so you can make sure you keep the placeholder there. Every now and then you will have to average, so keep that in mind depending on the information that the problem gives you. Let's review. What is treasury stock? These are questions you should be able to answer at this point. What is used in place of par when selling treasury stock? What is paid in capital's normal balance? What changed on the balance sheet as it relates to stockholders' equity section? What changed on the retained earnings statement? Explain stock splits in your own words, and then explain EPS. Make sure you go back and read each of these sections separately and that you practice all of the problems. I've given you 5 problems in this section and 9 or 10 problems in the first part. You should work through each of them and give yourself notes so that you prepare yourself for your exam and that you understand what it is that you're doing. If you have a question in the process, you may bring that question to me, to my office during office hours, or we can discuss via email, or you can go to tutoring so that you have clarity and thought so that you understand the chapter.